Welcome to the Money Huddle, a podcast that explores financial topics for families and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Planners Alliance. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Planners Alliance may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker, and today we got a special guest here with us in our studio, Ross Marinell. He's not the special guest. Nope. Our special guest is Thomas Brown from Stein LLC, a local tax professional group that we like to call our friends, and we asked Thomas to come in here to kick off, I guess, the inaugural what do you guys call it? Like Armageddon season, tax season?
The tax season. It's kind of like, if you ever watch Game of Thrones, winter is coming.
Yeah.
Tax season is coming.
With tax season. There's probably some memes out there
I'm sure
on
there
the
are.
internet that have that. So, well, thank you for joining us. We promise that we're not going to try to bore you with tax topics and have a pop quiz at the end of the show. But we always like to start off something with something fun or interesting that's local to the sports world. And while we're sitting here, we asked Thomas before the show started, like what his favorite sports was, and he said, "What did you say?"
Anything track and field. Track and
field. So, give us more about that. Because anything track and field, I could think of like 5 things I would want to know about right off the hand.
Well, I ran track in high school. I did the 800-meter dash and 400-meter dash.
Both of those sound horrible.
Yeah, they were a good butt exercise.
The 800 meters. So, all right, so 800 meters, that's like 2 laps around a quarter-mile track, right?
Mm-hmm, that's half a mile.
Like booking it.
Yeah, they call it a dash because if you get to college, it's no longer a distance, it's a sprint.
So what is it in high school? Is it like
in high school, it's a distance. Because in high school, most people don't make it under 2 minutes.
Oh my goodness. So I have an interesting story about that. So one day, my senior year in high school, after I was done with everything, I was out on the track, and I was just doing some sprint workouts because I'd finished lifting weights. And I was out there on a weekend, so I'd gone lift the weights, and I was like, I want to go do some sprint workouts. Mm-hmm. And so I went by my old high school, and I was there. And anyway, for whatever reason, I looked up like what the state record was and the 400. I was like, because I was a pretty decent athlete, I thought, right? So I was like, well, let me just see what this is, and I'll go out there. And man, it was at the time, who knows? This is late 90s, but it was like mid 50s. Like it was under a minute. Mm-hmm. But I was like, all right, if I can like book it and hold the pace and just no matter how painful it gets, just like push through, I could maybe get close, right? Man, I didn't make it 3/4 away around the track, and then I was like, oh, there's my hammy. There it went.
Yeah. And the worst part is trying to speed up on that last turn.
I can't even imagine. Track and field. So any field parts to that or just track?
No, I never did any field parts. My coach wouldn't let me do. I wanted to do pole vault, but my coach wouldn't let me do it because he said I was too valuable on the field or, running around that track.
We need you to run the 800.
Mm-hmm.
Nothing else. And then, all right. Well, that's interesting. Haven't had a track and field athlete in here before. First time. Yeah. And then the other thing is Ross and I, we talk about football. Whatever's in season is usually what we talk about. We're kind of closing the door on football. But, man, heartbreaking news came yesterday. Luke Kuechly. A lot of people's, number 59 on the field, number 1 in your heart, Carolina Panther announced retirement. He probably has some good advisors that said, hey, man, you don't need any more concussions. You got plenty of money. Let's go get this endorsements and let's go get that coaching money and let's move on. But, yeah, that caught everyone by surprise. I was in something yesterday and I looked back and I saw Luke Kuechly trending and I was like, what the heck's going on with that? And he is
29 years old?
20, yeah.
Or 28, some one of those two. I think he's set to be not even 30.
Well, I know that he's it'll be interesting to see how he is ultimately remembered. Like if you think he's got a shot at the Hall of Fame?
Michael, I don't know. 7 Pro Bowls in his, 8 seasons? So that's a strong case. But, hey, look, we got Thomas here. Winter is coming. Tax season is coming. So what do you do to get ready for the rush?
I think the first thing I do to get ready is talk to my wife about how she's not going to see me for a while.
Yeah. So what kind of, so for the person, because most people in their household, right, they think about their own tax situation. It's like, oh, what a pain.
Mm-hmm.
Got to get all our stuff together. But the tax professional has a much different life experience during this period of time. What is a weekly, what does a week look like for you during tax season?
Once it gets in full gear, it's usually every day I'm up at 6:30. I'm usually at my computer by about 7:30 typing up emails to clients.
Mm-hmm.
And then if I'm in the office by 8:30, I'm in the office either interviewing,
Right.
data entering for tax returns, bookkeeping, you name it. That lasts until about 9 or 10 o'clock at night, and that goes Monday through Saturday.
Oh, so you got extra day on there.
Mm-hmm. And Sunday sometimes is the catching up of the internal workings of the business.
Man. So one question I had before we got started, and I wanted to make sure I asked, because I think it's always interesting to see what path people take to get into their chosen profession. And so, Thomas, you're a younger guy. So what makes a younger person decide, hey, I want to get into the tax business? How does that work?
I've always been a math fan.
Yeah.
And oddly enough, in high school, it was a lot of chemistry and physics. I didn't like statistics and everything. And then I got my first real job and had to pay taxes.
Oh.
And so I started to figure out that maybe I like...
Who's this FICA guy, and why is he taking all my money?
Exactly. So I started figuring out really quickly what I could do, and I have every single tax return from 2006 when I filed my first tax return till today, still sitting in my office, so that I can go back and reference, because when I first started filing my tax returns, I actually didn't do, because they had H&R Block, they had TurboTax and all that. I went to the local library back when they still offered the 1040 pamphlet. I grabbed the 1040 pamphlet for the IRS. I grabbed South Carolina's, and I filled it out by hand with a friend and filed my taxes that way.
Wow. So I think it's safe to say you're kind of built for this. Is that right?
I think so. I mean, looking at the numbers from the day, from the very start, trying to do this, there's a story that how I ended up working with Ted. I was actually working with my brother at the time and doing his bookkeeping, and Jonathan and Ted met for an interview to see if Jonathan wanted to work with T.T. Stein with his business, and I think I was up till midnight that night before getting the books together. And as Ted and Jonathan are talking, and I'm giving Ted my 2 cents of what's going on with the business, Ted said, "You get this, don't you?" And he asked me then if I wanted a job.
Right there on the spot.
Right there on the spot. It took him about a year or 2, I can't remember, before he really had the ability to hire me on, because he needed to get enough
create
clientele.
capacity for it.
Exactly. Yeah. And he did. He hired me on, and that was it.
That's pretty crazy, huh? So Jonathan, who has an electrician, he's an electrician, owns an electrical business.
Yes.
And you're there doing his books, and he's having the meeting with the new tax person coming in, basically saying, hey, here's what we can do for you, and here's how we can, we want to earn your business. And the tax guy's like, I want you to come work for me.
That's pretty much what he said.
Obviously, we could go on and on about our fun stories, but I have a couple of quick questions for you, just for people that will be listening, because I don't know if you've heard this or not, but not too many people look forward to tax season. Maybe some tax professionals do, because they get to see their clients and catch up. And I know that for a lot of people, it's a really high capacity time, and then you kind of have a little downtime.
Mm-hmm.
So kind of your business year gets divided a little bit. But for most people, taxes are stressful, and create a sore spot for a lot of people. So what kind of advice would you give to people who are, who look at tax season as, kind of a stressful time? What can they do to make their lives easier?
I think the best thing to do is, you're going to get all the documents you need. And 9 times out of 10, if you think you have a simple tax return, most tax professionals will talk to you for at least an hour for free. So if you think you have a complicated situation, call a tax preparer. Mm-hmm. Ask them, and they'll talk to you, because they can kind of talk you off that ledge of knowing that this is not going to be so complicated, because you've got the documents, you key them in, and at the end of the day, what taxes you owe are the taxes you owe. Mm-hmm. And I don't know. It's tough, because I still fear that one on occasions myself.
Right. So you think people should take advantage of a free consultation if a practice or a firm offers one, that they should not be shy. They should, if they're interested in working with a group, mm-hmm. reach out and find out if they offer free consultation, and then take them up on that and just understand a little bit more about the services that they provide. Because I guess, like for Ross, like for us as advisors, we offer free consultations for people too, and I notice a lot of the marketing that's happening right now, especially in the tax world. It's like, we'll file it for free. We do it for free. Everything seems to be free. A high emphasis on, the little to no cost of the service, but what kind of value are you getting when it's just supposed to be free, when you could actually take advantage of going and speaking with a professional who could say, actually your situation is fairly simple. It doesn't require a lot. Or say, no, actually, there's some things that you probably need to talk through a little bit more with a seasoned professional. To me, that seems like a pretty significant way to look at it.
I think if you have more than just a W-2, that if you receive anything more than a W-2, you should probably contact a professional and just talk to them about what these other things mean, 1099-B, right. 1099 miscellaneous, K-1s, interest statements, dividend statements, any of these things. Some things can make a big difference in your tax, and some things might not. And if you key it in wrong, if you don't know what it means, it could make a big difference in how you're paying your taxes, I actually had a gentleman that I talked to this morning, an employee of another company, and he just asked me, he's like, I was on TurboTax this morning. All I have is a W-2, and it's telling me I have this error. And I said, it's like, you have a simple tax return. I said, come talk to me one day. It's like, I'll give you some advice for free. I was like, because if all you have is your W-2, it's like, I don't want to take your money away from you, right, for something so simple. It's like, but I can give you 10 minutes of advice and see if that can help you to fix your problem. I think he calmed down a lot more when he's noticed that he was just going to get 10 minutes of free advice, perhaps.
Yeah. I guess to me, that seems like a no-brainer. What do you think, man?
Well, I think sometimes there are when the Trump tax law changes occurred, the idea was, well, we're going to get the tax return down to a postcard size. And that may be the case for some folks, but the truth is, generally there's a little bit more complication involved. And
generally there are. And last year they did the postcard looking 1040. Right. They reverted it back to the old one this year.
Did they really?
They did.
I made 1 year.
In 1 year.
Well, I was just going to say, technically they did. They never promised it would stay that way, but they did get it down to a postcard.
They did for 1 year.
All right, so we're back to the original size, which is, in reality, you just need, most folks have enough going on within their financial lives that there's more that's warranted than just a W-2.
Exactly.
What are some of the common mistakes, just some of the small trip-ups that catch people? If there's anything that comes to mind that just kind of get people prepared, or some of the small hurdles they have to jump through.
Well, anybody that has their small businesses, that has their little Schedule C, a lot of them wait until the end to think about all those deductions, and they try to add them up. And I guarantee you they probably miss some. So it's better to be proactive if you have that business and keep track of your deductions throughout the year so you don't miss anything, because that deduction is a reduction in that income, and that can reduce that taxable obligation.
Right. So think about any self-employed individual that files on a Schedule C, common deductions that you're hoping they track monthly or quarterly at least. What would, if you rattled off some of the more common deductions that you want people on the lookout for?
It's really tough because it's very contingent upon the business. I mean, it can vary greatly. Some of the most common things, a lot of people have some form of an advertisement, whether they, bought business cards or, paid for, something on the radio to have their name out there or anything like that. A lot of times they miss some of those advertisements. If you have that small business and if you're not sure that if it's a deduction, keep the receipt and ask your tax professional, hey, I bought roses for my wife. Is that a deduction? We can guide you on whether, those things are or not.
Sounds like if someone was taking advantage of the free consultation and they had a handful of questions like that, it might make sense to do that. But no, I mean, obviously we know, generally speaking, business owners, people that are self-employed, have a little bit more complex tax circumstance than your regular W-2 employee because of, you do have self-employment income. You might be an LLC and make an S election where you have W-2 income, and then you've got business income, and there are deductions and things that are available, and you kind of are in charge of the whole pie versus when you're just when you're W-2, you get the form and the employer's paid their portion of the FICA. You've had it most likely withheld from your paycheck, and you're just trying to figure out like how you get your withholdings done so that you're not paying a huge amount at the end of the year. Speaking of that, I ask this question of just about everybody, and this is a conversation that I have more frequently than I would realize. But what are your general thoughts on people who like to over withhold on their money throughout the year so they can get a big refund because they feel like it's like a deferred bonus from the government, versus people who streamline that down and they're really trying to optimize their cash flow throughout the year? Right. What are your thoughts on that?
A lot of those people, at the end of the day, the taxes you owe are the taxes you owe, whether you've overpaid or underpaid. If at the end of the day you owe exactly $5,000, whether you've paid in nothing or you've paid in $100,000, you still owe this same amount of money. I like to pay in as close to what I'm going to owe because I would rather have that money throughout the year, because in a savings account alone, $2 in interest is better than no money at all, and the IRS does not pay you interest.
Yeah, that's what we always have. I mean, it's like giving, every once in a while we'll hear someone that they'll tell me like the size of the refund they got, and I said, you did what? And they're like, well, we don't like to worry about it. And I'm like, do you realize like what that could have funded like throughout the year? I mean, there's so many things that we could have been doing with that. But one of the things, man, I got to say, I'm a little disappointed. You're sitting here with, a couple of financial planners, and we're asking about like, tax deductions throughout the year. And you didn't just like come out with, well, they could have their IRA or simple or SEP IRA plan, tax deductible if you got earned income, within certain levels. No.
Yep. You can do that. Well, we get that one a lot, and we do tell people, because there's two different IRAs.
Sure.
Your traditional that can reduce that taxable obligation, and then your Roth that doesn't. And we have a lot of people that love the Roth IRA.
Of course.
Defer those taxes. But if once you hit about your middle age and you're at your highest earning income potential, sometimes it might be a better idea to contribute to a traditional IRA, because if you're in a 35%, well, maybe not 35, let's say 22% tax bracket at this point in time, and you can max out that IRA, that can make a significant impact on your taxes. Whereas you may defer your taxes for your Roth IRA so that when you take it out at retirement, you're not paying any taxes,
Sure.
but you may not be at that same high of an earning category when you're retiring. Most people, their income goes down when they retire because they don't need as much money, I would think.
Right. So basically the concept there is if you feel like the taxes you're going to pay this year, so let's say 2019 or 2020 is going to be higher than the taxes you may pay when you're retired. Let's say that's 20 or 30 years down the road. Mm-hmm. It may make sense to make a tax deferred contribution in a traditional IRA or 401k now, reduce your tax burden in the current year, pay a little less tax now, and then knowing that you may pay ordinary income on that when you withdraw it in retirement.
Yes.
Right. That's interesting. So there's a few key things to be on the lookout for. Now, talk a little bit about some changes for the current tax year. I know before we fired up the podcast, you had talked a little bit about some changes to the W-4 this year.
Yes, they did come out with a new W-4. So if you are currently employed, from what I understand, you're not going to be required to fill out a new W-4. That may be contingent upon your employer of whether they're going to ask you to or not. So if you've been employed and you're asked to fill out a new one, then that's probably what your employer is doing. But if you're employed and you're not asked to fill out one, it's probably because your employer is not taking advantage or asking you to fill out the new one. But if you start your job in 2020, you will fill out a new W-4. It is a lot more complex than the old ones. It asks a lot of questions. It asks if you are a multi-wage family, meaning you have a husband and a wife that both earn income, or if you are just a single wage family. One of the interesting things that it has on there, and I think it's question or part number 4, is do you have like dividend income? So those people that own some stock and they know every year I get like $2,000 in dividends from this stock and I love it and I always reinvest it, but that makes me have to owe now because I don't hold just enough out of my W-2. So I always owe like an extra $300. Well, this question talks about that, and you can put in how much you on average earn in dividends, and it's supposed to help take into account so that you can withhold that little bit more for yourself.
A little extra. That's not bad. I mean, it probably, like anything new, is going to create a little bit of a strife, but then once people figure it out or take advantage of, free consultation and
I would
how to
with
do
that.
it, then, to me, that's a tremendous value add that, people should be taking advantage of when you're getting a new form like that is going to look like Greek to a lot of people. Getting some counseling on like how to fill that out, how to properly do it, because it's been my experience that sometimes even the companies that are required to have people fill these out, they don't necessarily know the best way to fill them out either, or they like to refrain from giving what would be deemed as advice, and they say talk to your tax professional about how you should do this, because they don't want next year you to come out like you said to fill it out this way and I got totally burned on my taxes. That's not really good for the company morale.
No, not at all. I would suggest if you're filling out this new one, especially if you do have other types of what they call passive income, to consult a tax professional.
Absolutely. Well, we're wrapping up here, but I'm going to ask you one question because we are going to get this question. Ross and I both are going to get this question frequently throughout the year. I imagine you might hear it some, but this is 2020. It's an election year. We're going to have plenty of people asking us, what we think about the election and how they should be considering investing and what type of things they should be changing. Do you guys ever get that from the tax standpoint about like, hey, it's election year, like what do you think could happen or what should we be concerned about, or should we be concerned? Do you ever get any people wanting some political sidebars from you guys?
We get a lot of those questions, and when we filed taxes last year for most of our people, at least I'd probably say half of them, there was some political conversation that came up because it was the first, Tax Cut and Jobs Act was the first major overhaul in the taxes since the 1980s, I believe.
Yeah.
So a lot of people gave their very strong opinions left, right, and center indifferent on what they thought about the Tax Cut and Jobs Act. And I think that there's going to be some more questions that arise. If there's a new president, how does that change? If it's the same president, how does that change? So yes, we get that a lot.
Yeah, I would imagine, the one thing that most people seem to, I would say a lot of people have, it just seems like everybody has a political opinion these days, but when it comes to taxes, because generally speaking, if you're working, you're paying taxes in some way, shape, or form, and so a lot of people are like, wait, what just happened with the tax code? Am I going to owe more money? Am I going to owe less money? And that seems to be a political, baton that gets kicked around a lot. Like, well, we're going to, you're going to pay less, you're going to pay more. So I was just curious about that. Anything that people need to be more aware of? What's one area, if you could think of something that catches a lot of people off guard when they're coming in to prepare their taxes, and you're like, hey, don't forget X, Y, and Z? Are there things that people are just forgetful about when it comes time to get their taxes done?
I think a lot of times people probably, oddly enough, I think we had a couple of people forget about their brokerage statements last year.
Really?
Yes.
Well, fourth quarter last year was very 2018 fourth quarter was very forgetful. Like, I don't want to remember that. That was a terrible quarter. Well, I imagine a lot of people will see. What'll be interesting to see will be probably the differences in attitude, because if you're filing for year 2019, you're getting, or you're filing in 2019, you have the memory of fourth quarter 2018 fresh on the brain, whereas this year, 2019 was a pretty strong year for U.S. equity markets, and so maybe people have a little bit more optimistic view of what their brokerage statements look like, and hopefully won't forget them, right?
Yeah. Well, and then the other thing to make sure of, because what we always do when we come in, we have people come in for their taxes, and we give them what we call a tax interview. And we go through and ask them every question we can think of. And we have a pretty comprehensive list of questions to talk about income and deductions. And we do get a lot of people that say, oh, I needed to count that, or, oh, that was something, because one of the biggest questions that we're going to have to ask this year, do you own virtual currency?
Are you talking about cryptocurrencies?
Yes, we are.
Not again. Well, they need to be answering, because you can't skirt it. One of the things that drove me bananas about the whole run up in the price is this idea that it's virtual, it's crypto, it's not tracked. So I'm just going to maybe pretend as if this didn't occur. And a huge mistake, I think, for folks that weren't upfront about that. But hopefully they catch up this year and get honest about reporting of that.
Yeah, well, it's pretty clear with the IRC regulations. All income, even illegal income, and that is in the tax law, and it's also in the tax law. I believe I read income from terrorist or related organizations are taxable. Don't ask me how you count your terrorist-related organization income.
That's like the stuff that I've heard here, at least locally, where a law enforcement agency will say, "Hey, don't take bad crystal meth. Like,
take
we'll
the
test,
good one.
Make sure you have good, high quality crystal meth. Bring it down. We'll test it for you."
Talk about the IRS casting a wide net.
Yeah. Well, they added in the illegal income because of Al Capone?
Just to be clear. Wow, that's interesting. So, good point, though. When you have gains, even if it's something like a crypto asset that you're trading, it still needs to be recorded and registered.
Yep. Anytime you make money, it's supposed to be income.
But it works both ways, because last podcast we talked about 90% of the Ethereum owners being underwater. That can also count as a capital loss too. So it works both ways.
Absolutely, and so that's the thing is, my big takeaway from talking to you, Thomas, has been that there's going to be a lot of marketing over the next several weeks. I know I can't watch football. Football has pretty much been ruined because I'm forced to watch financial commercials that make me want to throw up. But I'll edit that out. Maybe I won't. But the ones that have been running lately have been all the tax stuff. And it's like, oh, free. Oh, get your money back. Oh, we'll give you an interest-free loan on your refund, all this other stuff. And I'm thinking to myself, like, where is the firms that are out there, like professionals like you guys, like, hey, come in. We'll give you a free consultation. We'll do an interview with you. We'll ask you questions. We'll educate you. We'll help you understand your situation better so you can make better decisions, which compound over time. It's like or do you want to just like mentally check out and say, hey, do I owe? Do I not owe? Or do you want to get better? And those are the people that we love talking to. We love talking to folks that like, hey, I want to get better. Even if it's just a little bit better each and every year, I want to make sure like I'm doing the best I can. I'm doing the optimal things I can do with my money because I know in the long run, it should be able to pay off for me.
Yeah. Fiscally responsible people.
Like it.
Love it.
Awesome. Well, Thomas, thank you so much for coming in and visit with us. We wish you all the best with tax season.
Thank you.
And I guess we'll say, what did we say? We'll see you on the other side?
Yeah, see me on the other side, I guess.
As always, thank you for listening. If you liked what you heard on the Money Huddle, feel free to find us on Facebook. Shoot us a message. Let us know if there's a topic you'd like us to talk about on the show. Our email address is themoneyhuddle@vcplanning.com. And as always, we will talk to you next time.